Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Happy GDP Thursday as we're looking at the aftermath of the hot zone from 8:30 this morning, 8:30 Eastern. We get that gross domestic product. It's one of those major economic releases that hardly means anything anymore from a macroeconomic standpoint because, well, quite frankly, is not a reflection of anything that the Federal Reserve is really focusing on to change their monetary policy. Those would be jobs, those would be inflation numbers. And I was mentioning to the group in the Sector Secrets Mastery this morning that because the Federal Reserve has chosen to ignore what a recession typically is based on GDP data, now that we've ignored that, what does that data mean anymore? And what does even the word recession mean anymore? And those things have really taken down a notch. I pretty much reduced the word recession to clickbait because that's all that it is anymore. And so we get this GDP hot zone. But one thing that was really important, two things actually that were really important outcomes of the GDP. Number one, it was a miss. Expectations were for a 5.2. That was the previous and the consensus or the forecast, whatever you want to. They're not the same thing, but 5.2 is what was expected. We got a 4.9, which is a miss in terms of what we thought we were going to get. And bad news is still bullish, right? Misses are still bullish. And we saw the way in which the NASDAQ and the S&P shot up higher on that miss, right? It just incrementally actually increased the expectation of the Federal Reserve to hike in March. So it was actually 69.6% before GDP. It went to about 70 something percent. Post GDP, it was 71.1, and you'll see now it's 72.7. So it's very slowly continuing to move higher as we are in this 33 minutes now past that GDP release. So this has been, look, is it bullish? Yeah, equity's headed higher, but is it dovish? Two sets of animals here, right? Is it dovish? Yes, it was a dovish release. It only increases the expectation for the Fed to act. Now, in terms of any other takeaway for this week, look, tomorrow is really going to be the big data point. Tomorrow is PCE, and that's the big number that the Federal Reserve uses for their models in terms of where inflation is at. So tomorrow at 8:30, core PCE, far, far, far bigger an impact potentially than today's GDP. And frankly, I would even say tomorrow's revised University of Michigan inflation expectation is going to be more important than GDP. So that's coming up tomorrow. And that's going to be day one of, if we're going to be specific about Santa, that's going to be day one of if there's a window for the Santa rally. That's where I would look for it to kick in. So we are still in a very bullish environment, gang. Please don't let folks who are not already long or reacting to a single day's candle tell you that this is the beginning of some kind of end. My gosh, I still hear a lot of that, and it's painful to listen to. So could this be tomorrow's data? Could this be something that changes our expectations for a Fed rate cut in March, and therefore would be a reason to pull back a little bit and sort of settle down the really bullish expectations on the Fed cutting sooner rather than later? Yes, tomorrow's PCE would be absolutely a reason to do that. And if the PCE ticks up, let's say we get a 0.4, yeah, I would imagine rate cut expectations move out of March and more so into May. 0.2, 0.3, probably not going to change much, especially in light of this somewhat meh GDP. All right, so that is it. That's what we have right now after our GDP. And as always, phone lines are open for your request. If you have any questions, feel free to type them on in, gang, and we will tackle them live. All right, first up, let's get the charts up here. All right, there we go. So first up is good morning. Alex asks, can I comment on yesterday's out of the blue sell-off? I know it really doesn't matter, but inquiring minds want to know. Well, I must not be an inquiring mind, Alex, because I really don't know, don't care. It just did. My favorite answer is what one of my mentors told me a long time ago. Hey, why are we up today? More buying than selling. And that's not really true. It should be more buyers than sellers, but you get the gist. More sellers than buyers. I mean, that's it. What I can tell you is what we did with it, right? The why is let the folks on television speculate on that nonsense, right? Our job is to do something with it. So my thought is this. What do we do with a sell-off like that? The first thing we ask is, where did that sell-off land us, right? Did it give us a pitch that we could swing at? And the truth of the matter is it did. So I'll tell you what I did with it, Alex. I'll tell you what our Sector Secrets Mastery folks did with it. We're long Qs yesterday. We went with QQQ, overnight swing, 1 to 3 day time horizon. We did that right in here, right in that gray area, actually midway down the gray area with a moderate trigger. So when the NASDAQ was flirting with 16,765, when the QQQs were flirting with, here we go, right back into that daily price movement range. Right here around 403, we grabbed some calls that will expire on Friday, and we're actually looking to potentially scale out at the open of half the position this morning. So that's what we did. I don't know, Alex. I'll be straight up. I don't know, but I think to your point, and I don't care. I only want to know if there's something I can do with that information. All right. Cindy asked, thank you for answering all the questions. My pleasure and my job. Can I please talk about the machine? What's an algo? I'm going to file this under another thing that I don't care about, Cindy. Yeah, I know. Alex and Cindy, great questions. I'm going to file that under a great big who cares. I'll put it to you this way, Cindy. When I first started trading, and it's been a minute, in the late 80s, early 90s, the bad guy. Remember, there always has to be a bad guy. Remember, gang, there's always going to be a monster at the top of the stairs and some creature under the bed. There always does. Even in Wall Street and trading, there has to be a bad guy. The bad guy in the late 80s, early 90s were the floor traders. They're running our stops. And so they were the bad guys. Okay. Fast forward a few more years, by the mid 90s, the bad guys started being systems. Oh, look out for the systems. And then remember, every time there's a bad guy, there's a whole cottage industry that rises up and shows you how to deal with the bad guys. Okay. Then fast forward to, and I'm probably starting to lose track of all the bad guys because it's been like a Marvel comic worthy villain list. Then it turned into, so floor traders, the systems, then it turned into high frequency. Oh yeah, high frequency was going to be the end of us all. Don't y'all remember high frequency? They wrote books about it. There were 60-minute specials about it, right? High frequency was going to be the end of trading and investing as we know it. And then after high frequency came algos, and their systems, high frequency algos, they're kind of the same thing. All right. They're kind of the same thing. I'll tell you this, they haven't changed my life one bit. What's happened for sure, though, is the market can move for different reasons. But as we see higher and higher prices on the NASDAQ, right? Those of you that have been trading 25, 30 years like myself, 16,000 NASDAQ is huge. Once upon a time, a 50-point move in the Dow was a lot, but the Dow was also a very different, trading at a very different price, right? Same with the NASDAQ, same with the S&P. As the value of the thing goes higher, so too does the percentage in terms of point move. So we're just seeing a very natural, organic evolution of volatility. And we're seeing a couple other catalysts, right? So I don't care what they are. I don't care what they do. It doesn't factor into my trading in any way because the same understanding of volume, volatility, time, and price, gang, I'll tell you this much, it will always work. Know where the open interest is. Know where the volume is based on price. Know which events could change hearts and minds, right? Know what those important macroeconomic data points are. That will continue to work. And by the way, there'll be something after algos. After algos, it'll probably be AI and whatever else the next villain is going to be in the market. So I don't know to what degree the algos are going to affect our individual lives. I can tell you this, hasn't affected me at all. Remember, if you're measuring volume, if you're measuring volatility, and if you're looking at what time of day different events are going to happen, even basic things like the clearing range and the closing period and lunchtime doldrums and different economic events and pit bull lows and third Fridays of the month and the end of quarter and end of month, all those are happening anyways. And then there's certain things, math. What is an algo? It's math. Cindy, it's math. That's it. That's it. All right. So I hope that makes sense. I think we like villains. I really don't care, but it gives us someone to blame, right? Why'd you get stopped out? Oh, it was the algos. Oh, not a poor trading plan and not ill position sizing and a poor choice of stops. Oh, got it. Whatever we can do to blame something else, let's be real. Okay, next up, Harrison. There's a gap between the Z and H contract of ES. Yes. How then can we use this to say we're heading to all-time highs? I don't follow the question. There's a gap. How then can we say, why can't we say that, Harrison? So you're saying because there's a gap between, so it sounds like there's a general misunderstanding of what futures contracts are. Maybe I'm speculating. So Harrison, every futures contract has a contract month, and the contract month is often called a delivery month, which makes a lot more sense when you're growing corn and selling it, right? I'm not growing S&P plants and selling those, but it's the same idea. A contract month is the delivery month. All right. So if my expectation, can we use corn? Because it's the same idea. If my expectation was come December, this will be the value of corn, and that's the contract price, and that's when I've got to deliver 5,000 bushels of corn per contract. That's the contract size, by the way. I'm speculating on what corn will be worth in December. But if I bought March corn, right, it's further out, so there's more uncertainty. Maybe there are weather patterns. Maybe there is a different demand in March than December. March's contract will be worth something else. So whenever we're moving from one contract to the next, the speculation isn't just on corn, or in the case of your question, the S&P. The question is, what is the value of that thing going to be by the end of that contract? Substitute crude, substitute bonds, substitute gold. It's the same thing. So remember that there's no such thing as a continuous contract, right? That's something that charting platforms and us traders have imposed on our charts, on price, as a way to have a little bit more of a continuity to the data, right? I don't want to have look at March. I want to look at where we were for the last 2 or 3 years, and I can't do that with, say, a March 2024 contract. So some of it is just the way in which we've stitched these things together, right? So that's just the way the contracts work. Continuous contracts are a convenience, but it doesn't in any way suggest the highs aren't real. No, not at all. Okay. Next up, BLP says, was yesterday's drop the kind of dip I refer to as an opportunity to enter the trade? Yes, BLP, and that's exactly what we did. Okay, next up is, I think I should create a bot for auto trading. Oh gosh, Praveen, I must be too much of a control freak to go straight to completely automated trading. I've thought about it, right? The baby steps have got to be this. Praveen, I think it takes decades to find the indicators, to then automate them, and then finally get to a point where you can say, I've got a time-tested, multi-seasonal approach that I could just let run automatically. I think I'm too much of a control freak to do it, but who knows? Who knows? Stay tuned. We'll find out. All right. Michelle, let's see. Oh, Captain Jane, did the giant gummies? I haven't done it yet. I have not done it yet. All the pieces are sitting and waiting. I haven't done it, but I will report back. Thank you for the question. All right, Michelle, I love your comment here. The human brain is not happy. If it cannot tell itself an acceptable story, it will keep making new versions till it settles on a good story. And, I'll even go one step before that, Michelle, and you're spot on. It's the kind of questions we ask ourselves. The brain will answer any question. Rog, why are you such a great trader? And the brain will go, hey, this is why. Rog, why are you such a terrible trader? And the brain will answer that question too. So tricky, the questions we ask our brain, yeah? But it is true, Michelle. I completely agree. And we tend to like the negative, don't we? I will tell you, there are people that have garnered monster following simply by telling everybody the markets are about to crash. People who are optimistic don't gain the same kind of following as the people who are wrong. Look, there are people who've been calling for the market to crash all year long, and they have a rabid following, right? Why? I don't know. Well, I do have answers, but they're really mean. They're really mean answers, so I won't go there. But optimists get made fun of. And we have, as a culture, somehow elevated pessimism to, or being jaded to some semblance of experience and wisdom. Being a bull over time is going to far outproduce the perma bears and the clickbait. The markets are going to crash folks out there. But yeah, you're so right, Michelle. Yeah. Okay. Let's see here. Cindy asked, besides my own invented indicators, do I like Ichimoku Cloud, Super Trend, Money Flow? Not really. No, I mean, this is where it's really tricky, Cindy. I'll be honest. I debated skipping over your question only because, and it's a fair question, I'm always going to be honest with y'all. I don't want in any way to suggest those aren't good, right? Some people like pineapple on their pizza. I like sausage, right? But it's still pizza. There's a difference between someone like me saying, this is what I use as an insinuation to this is the only thing you could use versus this is what I prefer to use. So nothing wrong with any of those things. Clearly, people that I like and respect use some of those things. I don't. And it has no other far-reaching implication other than I simply don't, because I don't like pineapple on my pizza. I like sausage, maybe pepperoni. And I like my pizza burnt, right? It's all preference at some point. And clearly I woke up hungry. All right, San asks, Raghee, the 5-day, 50-day on the S&P is still quite overbought. Oh, San, I sigh because I appreciate the question. Please, gang, for all that is good and holy, please stop looking for overbought environments in trends. Just please stop. It's going to serve you so much better to ask yourself about where the retracements are. I don't know what the 5 and 50, I don't even know what that means, San, to be quite frank. The 5 and 50 what? 5 and 50 simple, which I don't use anyway. And how can a moving average, I don't even know what 5 and 50 day are unless you're talking about simple moving averages. And moving averages are never overbought, right? They're just trends. They're averages of the previous number of periods, right, that they're calculating. Please, gang, how many folks thought, and look, PCE could crush the market tomorrow, but that's not because of some overbought within the structure of an overall uptrend. Please, gang, focus on mean reversions and retracements and things like that. Please stop looking for overbought. And I get a lot of questions on this. Whoever says an uptrend's overbought, mute them because they don't know what they're talking about. I'm going to say it. They have no idea what they're talking about. You're going to be far better off in life thinking that physics 101, let's listen to Newton, not even Raghee. Things in motion tend to stay in motion. Do trends pull back? Of course they do. We're always going to be better off presuming continuation than we are counter trending and expecting a reversal. All right. So that's definitely something that is, look, my 2 cents, right? Always my 2 cents. Let's see. Next up is, and am I out of time yet? No, I am not. JY asked, please take this as a compliment. It's a good thing I'm sitting down. How did my poor father keep up with me? My mom called me yeah, but. Yeah, my mom used to call me yeah, but. I've been a verbose pain in the neck my entire life. Thank you, JY. Thanks for the chuckle. All right, SMA. So San, moving averages don't even indicate overbought or oversold. They can indicate crossing, right? Which is cool. But please, my friend, listen to me now. Believe me later. Focus on continuation when you have a trend. Don't focus on, hey, let's pick the top and short. One's going to be a nightmare of a trading existence. The other one's going to feel much more in flow, much more in tune with what's happening. There is going to always be that one last high in a trend, but fear of that is going to cost you money versus just buying the dip 4, 5, 6 times until buy the dip one time doesn't work within the context of an eventual reversal or break of the trend. So I hope that helps, gang. I super appreciate you all listening to verbose, opinionated Raghee every morning. But look, I am rooting for retail traders. I want you to win. And I've just spent too much of my career listening to folks talk about things that A, they're not doing, and B, just have no basis in the data. And that's where I'm coming from. It's always going to be data. It's always going to be years and years, if not decades, of making mistakes and hoping that you all don't have to do the same. All right. The same things that my mentors did for me. So I appreciate your time. I appreciate the questions. And I'll see you tomorrow. Same time, same station, gang. Be good to each other.